Hi, well, this is Dr. J streaming live from Long Island, New York, where the weather was quite nice. It was a glorious day here, a glorious Sunday in Long Island, New York. Getting ready for the new trading week, eagerly awaiting Monday, or maybe with a little trepidation. I can take a little bit of a deep breath, knowing that the Mueller report does not incriminate our president with respect to collusion. The case for obstruction is not clear. So it looks like the markets will take it, will now be able to exhale. I don't think the negativity that we've seen in the market, the downside that we've seen in the market, really had anything to do with the Mueller report coming out, maybe to a small extent. But I think actually it was sort of baked in that things would be all right, that there would be no impeachment proceedings, that Donald Trump would be president at least for 4 years. So I don't think that's a great fact. I think what caused the problem on Friday is a number of other factors. One is a lot of technical factors of charts of various S&P 500 stocks began to look ominous. A lot of engulfing candles cropped up about 2 weeks ago and then again last week on the weekly. So we have these engulfing candles in stocks like CRM. I think even Microsoft might have had one. I don't recall. There was a whole bunch of them, Baba. And then the averages as well. I think the rut may not have had an engulfing, but it just looks ugly. We'll take a look at it. We're going to take a look at the Dow, the rut, maybe Amazon, maybe one or two others. But really, I want to say what I think is going to happen on Monday. I think it's going to make a run. The averages will make a run up, get back about half of the losses from Friday, approximately, maybe a little less, and then unfortunately turn around and go down. I think we are going to be in a corrective phase over the next week to 2 weeks. I think there are three factors, the technical factors that I already mentioned. One, the PMI being very soft, manufacturing index. And third factor is not Mueller so much, but the crossover in the 90-day rate with the 10-year rate. Whenever that happens, it is followed by a recession. Now, when will that recession come? Well, the answer is as early as 6 months later. It could be a year later, could even be two. But invariably, it seems to happen. So this is a tremendous leading indicator to recession. And already the economists on Wall Street are almost unanimous, almost of one mind that the S&P will be worse in the second, not the S&P, the GDP will be worse in the second half of the year than the first. So it'll be a slowing. Question is, how bad is that slowing going to be? Is it going to be a negative territory or just like 1%, half 1%? That is not a recession. It's just anemic growth. It's got to be two consecutive quarters of negative growth, right, for a recession. I don't know that that's going to happen in the first and second quarter of this year. So I rule out 6 months from now. I would say at least a year from now. That's why I concluded that we would not be in a full-fledged bear market beginning Monday, regardless of the Mueller report. My feeling was, and I expressed it in a comment actually, because I forgot to express it in the videos that I made over the weekend. But my feeling was that whatever the result of the Mueller report was, whether it exonerated Trump or not, it would have a limited effect, a short-term effect on the markets. So I think it'll give the markets a boost tomorrow morning, enough to bring it back at least halfway from Friday, maybe a little more, but not all the way. I mean, there is a scenario where it could bring it all the way back, completely undo that red candle on Friday, and we continue on our merry bullish ways. But I would rate that a 3-to-1 underdog at this point. I think we're more than likely, 75% likely to be going down. So that's what I want to look at, the reasons why I think that's true, and how far down. How far down is really the hard part to call. To say it's going down, I'd say 9 out of 10 pundits would come up with the same conclusion. So it's up to Dr. J to nail just how far down it's going to go. Let's give it a try. Let's go to the charts. Let's take a look. Come on. I'm going to share screen, or at least I'm attempting to share screen. Okay, there we go. I'm going to use Yahoo Finance like I always do, and take a look first at the Dow. Now I have a purple portion to my daily, and that's because I drew in a Fibonacci retrace. So if we assume the correction began right here on the 25th of February at a high of 26,241, and you heard me talk about this number for many days now, 26,241. We have to take out 26,241. If we don't take out 26,241, we're going to go down and go down a lot. Well, we didn't take out 26,241, so we're going to go down and we're going to go down a lot. Now, the question is, how much is a lot? I don't think we get a full retrace. A full retrace would be down to the Christmas day lows of 21,712. I don't think that's going to happen. So it'll stop somewhere in between, maybe the 61.8 retrace. That's a very common stopping point, 23,453. So that would be my number one guess, 23,453. That's pretty steep. That's 2,000 points from here. That's no joke. I mean, that's about 7%. I'm doing it in my head, something like that. From here, significant enough decline to make it unpleasant. But as I said during the weekend in my videos, it's a chance to get out of your stocks that were underperforming, go into some better quality stocks, maybe some defensive names like Costco, juggle around your portfolio a little bit in anticipation of a 7 to 10% decline. If it doesn't stop at the 61.8% retrace, then I think we're looking at an even steeper retrace. Let me draw in a horizontal line. I drew in a lot of horizontal lines. I'll draw in one more. Let's say we're looking at 22,639, if not, another 1,000 points down. I don't think we get a full retrace. At least I hope not. Because if we get a full retrace, we'll probably go beyond that and be in have an add to the bear case that the bull is dead and we're in a bear market. So I really hope we don't go that far. Anything short of that, I'm very optimistic we'll come back and have one more leg to the bull before the bull dies. So it's very, very vital in my mind that we do not have a full retrace, that we go down maybe, like I said, originally to the 419, something like that. Okay, so that's my official guess, and that's all it is. It's a guess. I'm going to say we stop at 23,419. I'm going to say on Monday, this is the Dr. J's crystal ball at work. On Monday, we get back about half of this, let's say to 25,650, and then go back down and finish down on the day, maybe 25,4. So those are my numbers for Monday. And then I think we continue on down for the rest of the week. And probably for 2 weeks, we will have a very volatile, hectic 2 weeks in which we see a pretty steep decline to the 24,000 level, somewhere in the 24,000s. So I felt compelled to come on because the Mueller report was released, and it got a lot of people happy, which is good. And it made a lot of people sad, because I know that very liberal Democrats are not enamored with our president. And I'm not saying whether I'm enamored with President Trump or not, but I am of the opinion that this exoneration of Trump will allow the markets a better chance to resume the bull than if there was impeachment hearings. That would have been the worst case scenario for the stock market. In any event, I think it's if people are unhappy with the president, there'll be a chance in a couple of years to vote against him. And if you change your mind because the economies have come back and your pocketbooks are lined with green stuff, and you want to vote him back in, you'll have that opportunity too. I think the American people deserve that opportunity to either vote him out or vote him in, and not rely on impeachment if in fact he didn't collude with foreign governments, if in fact the case for obstruction is not clear or well made. Then leave it lie, let the process work itself out. And I have great confidence in our democracy and our country, greatest country in the world. I'm going to end by saying, this has been Dr. J streaming live from Long Island, New York. God bless America. Shalom, sayonara, au revoir, arrivederci, ciao.